Good morning and welcome to the CNBC Africa special, coming to you from the mother city that is Cape Town here in South Africa. I am Fifi Peters. Of course, this is Brics Week as South Africa hosts the 10th annual meeting between Brazil, Russia, India, China, and of course South Africa. We've got a number of business leaders and delegates that are meeting here to really find a way to collaborate better, to achieve the goal of inclusive growth for shared prosperity in the fourth industrial revolution. Now, the BRICS grouping has a number of working groups that collaborate amongst each other to find solutions to pressing problems within the cluster, such as high unemployment, inequality, poverty, and also low economic growth. I am in Cape Town today with one of those working groups, the Financial Forum. The Financial Forum has been meeting each year at each summit on the sidelines, focusing on specific issues. This year's meeting is quite special because it includes, for the first time, DFIs from the rest of the continent, of course, being development finance institutions which comprise of the Financial Forum. Their focus this year is finding solutions to unlock the infrastructure development of finance and also how fintech technology can help address this too. At this stage, I'd like to introduce our panelists who will be walking us through this very important but also exciting conversation. And I'd like to start on my far left with Mr. Jabu Muluketi, who is the chairman of the Development Bank of Southern Africa. He is seated next to Mr. Hu Haibing, who is chairman of the China Development Bank. Mr. David Rashkinha, managing director of the Export-Import Bank of India. Mr. Sergei Bogatinkov, vice president at the VEB, or Russian Development Bank. And seated next to me, Mr. Leonardo Botelho Ferreira, who is a director at the Brazilian Development Bank. Gentlemen, good morning and thanks so much for your time. Pardon me. Now, you have been meeting for a number of years on the sidelines of the BRICS meetings, and you've been finding ways collectively to drive better sustainable development within our cluster. I'd actually like to find out what has been done so far over the years. And Mr. Muluketi, as our hosts, I would like to begin with you.
Thank you very much, Fifi. One of the things that I think are important about this forum is to share experiences. We are development banks in our different countries whose main brief from our shareholders, it's about issues of increasing the ability of the economy to serve its people. And infrastructure development is one such. And that experience that we share across the different jurisdictions around how we can make it easier, accessible, affordable, and the ability to crowd in private sector innovation and private sector partners. This is what we've been doing all this time, sharing that knowledge. The second bit that we've also been talking about is the role of technology. Technology is quite important. You referred to the fourth industrial revolution. One of the things in just our discussion this morning was to understand that there are huge opportunities around the fourth industrial revolution, from the issues of artificial intelligence, the issues of blockchain, but the most important thing where we should focus as development financial institution, it's around ensuring that the utilization of this technology does not increase the gaps between the haves and the have-nots. Sure. Because technology has a way of serving those who can afford it, you know, and marginalizing those who can't afford. And therefore, the role of us is to come up with innovation to ensure that we bridge this gap, to ensure that when the rest of society develops, we don't marginalize everybody else. The last point is around issues of human resource, human capital. What we have realized is that human capital is a driving force of every growing and industrializing and successful economies. We all have different needs across, Speaking for South Africa, I think the issues of skills, the issues of youth unemployment is one of the key things that we're looking at. And when you talk about human resources, the issues of gender, that amongst our communities, you can't have more than half of society in some instances being left out of the development. And hence our collaboration is to ensure that we are able to bring everyone on board to share skills and knowledge, and also to share platforms that enhance the ability for us to use human capital effectively.
No, for sure. And Mr. Hu, as Mr. Muleketi has said, this is about sharing experiences. But unlike here in South Africa, you have not really had to contend with an economy that has not performed to the best of its ability. I'd like to find out China's experience or Asia's experience in addressing some of the infrastructure backlogs in recent years.
It's a great pleasure to be here at the Financial Forum. Just now, the moderator mentioned 3 topics for discussion. First, infrastructure financing. Indeed, infrastructure development is foundational and crucial for any country's development. Over the past few years, the Chinese economy has been developing very fast, thanks in large part to infrastructure investment and development. Internationally, both developed and developing countries alike all need to upgrade and build infrastructure. In the past, developed countries had complete infrastructure systems, but now Europe, the US, and other countries need to have improved infrastructure. So for the economy going forward, infrastructure has a role to play. This year's forum will focus on infrastructure cooperation among our countries, which I believe is very important. As for China's experience, as I said, infrastructure has played a significant role in China's development over the past 4 decades. In China, we often say, if you want to get rich, build roads first. This is a simple truth in China. In the past years, China has done a lot in building highways, ports, high-speed rail, utility tunnels, etc. All these have played a very important role in promoting the Chinese economy. For the China Development Bank, we have supported many overseas projects, including in South Africa and Africa. 90% of the projects are infrastructure projects. CDB is China's major bank for medium to long-term lending. We have developed some knowledge and expertise in infrastructure. Here I want to share with you some of our experiences. First, we rely on government credit. We raise financing on the capital market by relying on government credit. Our bonds have a sovereign credit rating. Second, we pursue market-oriented operations. We take into account the fact that infrastructure projects are long-term, have a long life cycle. Secondly, we use market means to do financing. At CDB, we have subsidiaries for securities, for leasing, and for investment, so we can provide a package of solutions. Third, DFIs should play a leading role. In China, for urban infrastructure, for railways, for roads, as long as CDB is involved in those projects, commercial banks and other banks will follow our footsteps. So in all those ways, we have provided a full package of financial solutions. Now, 35% of the power sector, 65% of the highways, and 50% of the high-speed railways are financed by CDB. We hope to work together with the member banks to provide financial services for infrastructure in BRICS countries.
Quite a phenomenal story there, because everybody has witnessed China's growth in recent years, and infrastructure, as you have highlighted, the investment in infrastructure being the backbone of that growth. I mean, we've heard about what Mr. Hu has shared. The government has been very supportive in its financing of infrastructure. They've raised capital for it, going to their bond market. In fact, it's an entire full-scale package financing infrastructure. David, you also had the privilege of being in an economy where growth has not a disappointing trailblazing by the statistics. What has your experience been in addressing that infrastructure backlog, not only in India, but of course in other parts of the world where Exim Bank does provide finance?
Yeah, thank you, Fifi. Absolutely right. In India, the growth of the economy has been blazing. It's been 7% plus for the last few years. It's expected to cross 8% quite shortly. So that's something which has been almost blazing fast. But holding it back from the potential that it could have reached is exactly what you mentioned. Not just a country, it's almost a subcontinent of 1.3 billion people. The need for roads, railways, waterways, that is a critical aspect for future growth to occur. Now, the government has been doing this through a variety of means. They've been building up the highway network in the country. The Sagarmala initiative looks at connecting all the ports, but this is a long-term project which is going on. If I can come to a question about both within India as well as cross-border, what you're looking at essentially is an efficiency of use of capital. You have an asymmetric situation where capital is available, but capital is available in areas where it is not critically needed, and it is not so much available in areas where it is critically needed. You need a mechanism, therefore. It's unlike water, which always finds its own level. Capital will not necessarily find its own level. You need a mechanism to intermediate. What is that mechanism? Primarily, it is the development finance institutions, the development banks, and a mechanism for mitigating risk. Risk, after all, is something which an investor thrives on, but he needs a mitigation factor for that risk to make it bankable, to ensure that his returns are commensurate with that risk. That, I think, is what all of us are trying to do. At Exim Bank, we've been looking at infrastructure financing to a limited extent within the country because our mandate is primarily cross-border, but across border in our immediate neighborhood, Southern Asia, as well as within Africa, we have very large commitments running into tens of billions of dollars in areas like roads, power generation, transmission, distribution, railway networks, as well as soft infrastructure like skill formation, agriculture sectoral improvement, things like that. This is something we're very much focused on going forward.
Right, so strong growth, 8% possibly this year, but it could have been better if we had addressed the infrastructure backlog in that country. Sergey, like us here in South Africa, a weak economy that you're contending with, but obviously having to also ensure that you fulfill the economic needs there in Russia. Your experience in recent years, perhaps the past 5 or 10 years or so, in dealing with some of the infrastructure challenges in your country?
First of all, I have to admit that I cannot stop thanking our host here, first of all DBSA, for giving us a chance to enjoy hospitality of gorgeous country of South Africa and experience warm winter, something we don't get used to in Russia. Earlier today, we have had a very productive discussion within BRICS Interbank Cooperation Mechanism and gathered together high-level representatives of 5 countries. Please allow me to remind you just 2 figures about the BRICS. BRICS nations represent over 40% of the world population, and the territory of BRICS countries amounts up to the quarter of the land surface of the Earth. Now, when we are talking about infrastructure finance, needless to say that infrastructure is natural and obvious priority for all development institutions. And there is no doubt that careful, mindful, and sustainable development of such a huge territory, creating modern infrastructure, gives a chance to get the great number of people a chances for better life. Speaking about Russia, 4 years ago, Russia hosted Winter Olympic Games in the city of Sochi. Just a few weeks ago, we enjoyed the games of Football World Cup. While preparing for such a large-scale event, not only new modern stadiums and other sport and recreation facilities was built, but also new airports, roads, power generation objects, and other infrastructural environment received a great development input in Russia. National Bank played one of the key roles in arranging financing for that kind of infrastructure building. The aggregate value of the bank's completed and ongoing project exceeds USD 20 billion US dollars. Actually, every third project in our pipeline is an infrastructural project. And since we do not expect the next football World Cup to be held in Russia, at least because Qatar hosting the next one, I would like to share with you an approach how Russian government is going to continue its efforts in developing infrastructure. After having looked closely at the situation in our country, we understood that urban development can become a main driver for infrastructure development. According to experts, 600 most developed world cities have already been generating more than 60% of global GDP. Every year, the number of people that live in cities is growing. By 2050, 70% of the world's population will be urban. Cities are therefore emerging as global players on the talent competition sense. A well-organized city with the necessary infrastructure becomes the center of gravity in the modern economy. So whenever we do something to develop urban infrastructure, the effect is multiplied. In the nearest future, we'll see more and more economic power being concentrated in large cities. In this regard, one of our objectives is to create those large cities. It can be done through establishing agglomerations. In fact, there is already a special program in Russia to support agglomeration development. The idea is to create about 20 large agglomerations within the territory of Russia that would allow to develop neighboring rural areas as well by integrating them into the city's life. All this is aimed at creating comfortable cities and improving the quality of life. I hope that Russian experience in infrastructure development can be useful for our partners as well. And to conclude my speech, I would like to say that any ambitious projects looks really difficult to implement, but as Nelson Mandela, whose 100th birthday we are celebrating this year, said, it always seems impossible until it is done. Thank you.
Leonardo, Sergey shared with us Russia's experience. They are preparing for what everybody is faced with, the challenge of huge migration into the urban areas. They are preparing for that. They are putting infrastructure in place for that, like many parts of the world that are investing quite heavily in their smart cities. Before we get to that conversation, however, just lay the groundwork for Brazil's experience in recent years in addressing your infrastructure challenges.
Thanks, Fifi. Brazil has experienced a very interesting growth in infrastructure in the past few years. We have been facing many challenges with the urban development, sustainable development. We have to take care of our forestries as well, and to make sure that development can walk hand to hand with sustainability. So BNDES has been investing a lot in sustainability, in ecosystems, biodiversity, and of course we are very, very aligned with the major financial institutions, DFIs, in turning green our infrastructure portfolio in Brazil. Of course, Brazil, in the past few years, we have been facing challenges in the economic field as well. But I think the Brazilian government has managed to overcome all the issues that arise. It's a clear sign of the strength of institutions in Brazil, respect for law, the agreements, and the development bank system in Brazil has played an important role in this end as well. Not only offering adequate financial instruments to support the investments, but also moving towards crowding in of the private investors. I think this is a crucial role. So we have been investing a lot of time and money in developing credit enhancement instruments, fostering capital markets, developing innovative products in order to recycle BNDES capital as well, securitization. So a lot have been done in Brazil, and we, for the future, we also see a huge growth and demand, and we can build on the experience of our BRICS countries, partners, their strong experience in infrastructure, in manufacturing industry, to meet the huge and the growth Brazil needs in this sector. And Brazil is open to investments. We have adequate instruments to finance. We have up until 2019, the government is expecting to privatize or move tower concessions of almost 100 projects in several fields of infrastructure, such as transportation, energies, water and sanitation. So lots of opportunities for investment. And of course, the partnership among BRICS institutions, DFIs, can bring in their own experience and their own instruments, and their innovative approach to infrastructure financing can also, of course, be very important to the development of our countries.
All right. Right, thank you, gentlemen. I felt it was really important for us to understand where we all at, to just paint the environment of what we're all contending with. And Jabu, let's bring it back to why we are here. We're talking about how the fourth industrial revolution can help us move the needle a lot quicker in terms of infrastructure development being the backbone of any form of economic growth. You mentioned something so dear to me, that of making sure that that gap between the have and the have-nots does not increase, because that is South Africa's reality. We deal with the highest inequality rate in the world. And I imagine that's something that keeps you awake at night. And I imagine that's something that you have also been pondering on, how we can ensure, as we invest more in your blockchain technology, as we get more sophisticated in the use of data and cloud computing and AI, that we do this in such a way that that gap doesn't increase. As a member of the DFI, what's your thinking about an actionable solution to prevent this happening?
Okay. You know, one of the things that a number of things are happening. You know, I'll just cite two examples. One of which is extending access to financial services. And in doing that, there are a number of partners that has come on board. The mobile companies, you know, they've created platforms, including the institutional banks. They've created platforms where access to transactions is not just an issue that is urban bound, is not just that is something that marginalizes rural communities, and is something that is also affordable. The issue is access and affordability. So it means reducing the cost of transacting, but also at the same time extending the reach of transaction. That's one area. The second area, for instance, it's around certain products that have been put in these platforms, particularly in the continent of Africa, you know, where you find, at the end of the day, women entrepreneurs are able to sell their commodities, agricultural products, using this platform. So it becomes a market. So that's where you use technology to solve the problems of communities. People were producing agricultural products, but they did not have access to the markets. But through this technology, they could trade and even be able to manage the pricing at what point they're able to put their commodities on the market. And I think that's one of the things that say these are things that are happening as we speak. The other example that excited me a year ago is what is happening in Rwanda. In Rwanda, there's an issue of lack of infrastructure in terms of roads, you know, to move essential, what would one say, biological or health commodities from one hospital to the other. They came with a drone technology to move plasma and blood on demand from a place of storage to a place where it's required. This is happening in Rwanda. It's a program that is run by the Rwandese. It's something that has resolved a number of questions, one of which we know that blood in itself has a very, very limited shelf space. So it means by using this technology, you're also resolving the issue of ensuring that you don't dispose of such a commodity because it has basically expired in terms of shelf life, you know. And I'm saying those are some of the things that are happening. So in short, I'm saying when we talk about technology, when we talk about the role of the DFIs, it's about resolving those developmental issues. Because all of us here, our key mandate is developmental impact. Sure. How is it that this technology is able to improve, to make life easier for citizens across board? And I'm saying those are some of the things that have happened within the globe. Now, moving forward, we talk about very complex technologies, be it blockchain, be it distributive ledgers and all that. But the key message there is how do you standardize processes so that it's easy for people who are transacting to contract with government or with development banks, that's one. Secondly, not just contracting, but also to access services, small, medium-sized businesses, to access credit, to access markets. And this is what, when we talk about this technology, because at the end of the day, it must increase the opportunities of these economies to grow. South Africa is in the hard space. We're growing at 1.2%, according to the governor of the Reserve Bank. And our population is growing by 2%. That is a serious problem, because it means we are gradually losing value. You know, the value of life of ordinary citizens is being eroded every day. So it means these technologies must begin to ensure that economies grow, and they can only grow if more people transact, more people create small businesses, and more people get employed.
For sure, inclusive growth.
Exactly.
David and Mr. Hu, I'd like to bring this conversation about fintech to you. You guys come from a region where we've seen phenomenal things happening by the way of technological innovation in food, in communication, in transport, wherever. Mr. Hu, I'd like to find out from you what kind of opportunities, or if you're seeing any further opportunities that technology can bring towards financing more infrastructure development, but specifically highlighting on the word development, because I'm not talking about new projects here. I'm talking about China's experience in making sure that old infrastructure or infrastructure that was in need of maintenance still also got attention, and how perhaps we can use technological innovations, we can learn as Brics partners, how technological innovations can also help finance and improve existing infrastructure.
Indeed, the use of innovative technologies is very important for building and improving infrastructure, especially at a time when we are having the fourth industrial revolution, we're having AI, cloud computing, and big data. We need to make full use of those advanced technologies to develop innovative financial products and tools, and provides information for infrastructure building. Apart from technological advances, we need to pay attention to several things. First, for a country, strategic planning is very important for a country's development. It is also important for infrastructure. You cannot build a road here and the next day you change your plan as you have a lot of duplicated building. This is not acceptable. Globally, Chinese President Xi Jinping has proposed to build a community with a shared future for mankind. So for all countries, developed and developing countries alike need to align and coordinate their development strategies. Second, we need to have currency cooperation. Now, for all countries, financing is very important for infrastructure, and we need to have more cooperation in infrastructure financing. Among BRICS countries, we have a currency swap agreement. Under that agreement, we can have local currency facility. For example, we have had very good cooperation with Russia in local currency facility. At the Belt and Road Forum for International Cooperation, the Chinese president announced the special lending scheme of CDB, which is worth 250 billion RMB equivalent to support infrastructure financing. Among BRICS countries, we have lent more than $110 billion. So going forward, we will enhance cooperation with all members of the interbank cooperation mechanism to provide financing for infrastructure projects in our countries. Of course, we need to bring into full play the leading role of DFIs, as infrastructure projects are long-term and have long life cycles, and the returns are not certain for private investors. Therefore, DFIs should step in to provide sustainable, long-term, and low-cost financing for infrastructure projects. So these are my observations.
Thank you, Mr. Hu. And you touched on something very critical there, the financing of local of infrastructure in local currency, and especially given what is going on right now in the world, where we've got a whole host of issues that are causing things like the dollar to strengthen. And never mind, we've got rising interest rates in developed markets, but we've also got a talk of trade tensions. And David, I want to come to you here. How can fintech technology in any way improve the financing mechanisms for DFIs such that we remove that currency risk headache in the way we fund projects?
Okay, there's two things here. One is the removal of currency risk, and secondly, the use of fintech. I'm not sure the two overlap just yet. They'll probably come close to overlapping as time goes by, but right now, no. If you're looking at mitigating currency risk, there are mechanisms. In markets, you have the forwards and the futures markets for currencies, which give you the ability to look and get an idea of where the currency movements are headed. Hedging is possible. There are agencies to do that hedging. But hedging has a cost. And the cost of hedging is often sometimes uneconomical, because ultimately it is a thin market. Prices become fairer and more thin when you have a deep market with a large number of players who can offer you a quotation and drive down the pricing. But when it comes to currency risk hedging at the moment, apart from the banks in the currency markets and a few agencies which provide this kind of risk cover, the number of players isn't enough to give you cover over a long period of time. You can get cover for 90 days, 180 days, even 360 days very comfortably. It's a market rate. You read it off a screen. It's economical. But when you're talking of project financing, infrastructure financing, where you're going up to 10, 15, 20 years, the cost of cover for 20 years is prohibitive. So that is something where, as Mr. Hu mentioned, when you're looking at local currency financing ab initio, that perhaps makes more sense. If you can raise funds in that local currency market, deploy it for that particular project, that is probably a more economical way of hedging the currency risk than looking at third party. On your question on the blockchain, if you look at the distributed ledger, the whole concept of distributed ledger is one way of traceability, because you have multiple entities looking at a particular transaction and validating it. So it is almost impossible for anybody to try and defraud, because you can't you may control one or two nodes. You can't control a multiplicity of nodes. So it adds to the security of a transaction. Secondly, it gives you the traceability. So this becomes very important in an area like trade finance. And trade finance is not really long-dated financing, it's short-dated financing. You're starting to see, I would say, you're just about scratching the surface of distributed ledger technology in trade financing. I think there have been actually a few transactions around the world. In India, the HSBC Bank has run a couple of transactions using distributed ledger technology to see how documents can be moved from source to destination. But it is just the first few pilot mechanisms. Right now, it's an idea. Implementing that idea on a scale basis is still taking time.
Still taking time. Sergey, Russia's view, or the VEB's view on fintech and the opportunities that it presents for increasing or accelerating infrastructure development finance?
We think that this technology, I am talking about distributed ledger technologies, gives us a new chance to reconsider current operations, traditional operations of the banks. Within our group, VEB group, we have organized a special entity, our subsidiary called VEB Innovations, to study this technology more thoroughly. We believe that this technology can bring more trust in the operations, but we should study it very thoroughly in order not to this technology become and not to bring new risks. And therefore, we are starting using this technology not from financial operations right now, but in dealing with our ministries. For instance, we, as a pilot, have launched a program when notary actions can be done on this technology, and day by day analyzing the progress of this technology, we think that in future we could consider expanding its usage for financial operations.
Leonardo, your view?
In Brazil, within the Latin American countries, Brazil is the country that have more fintechs, and the major number of fintechs are based in Brazil, followed by Mexico and Colombia, and this increases a lot the use of these new technologies among the Brazilian DFIs. Particularly when it comes to blockchain, we have been developing a tool called True Budget, which is the main aim is to give full transparency to donors when it comes to official development assistance to Brazil, which is channeled through BNDES. So we can trace from the moment the money gets in BNDES until the last step, the last expenditure in the smallest village in the Amazon region, for instance, we can trace all the money all the time. We have been also fostering some innovative instruments in this digitalization effort. We have been we launched a call for proposals for Brazilian fintechs in order to improve our credit risk assessment, because they have these tools, often they know better the clients, so bring the DFIs closer to its clients. We are also developing instruments of matching customers to BNDES funds. We also aim in making reverse auctions, because BNDES acts as a second-tier bank. So the commercial banks in Brazil on-lend BNDES resources. So we are trying to reduce the costs for the small and medium companies through fintechs that made these reverse auctions that we call in Brazil. So the financial intermediaries which offer the last interest rates will receive more money for BNDES. We also have been with some innovative vehicles. We recently launched what is so-called BNDES Garage, in order to bring the startups. So BNDES is building this space. There are other agencies, innovation agencies in Brazil, but we think it's also role of our DFIs to set this space for the startup companies to develop its products, and being nurtured since the very beginning with resources, with technology, and with finance from BNDES. So we just launched this initiative. It's called BNDES Garage, and we, like other entrepreneurs, we hope that we will see very innovative projects and the startups in the future.
No, perfect. And, you know, as we certainly do wrap up the conversations that are happening right now, I'd just like to get some closing comments or closing thoughts about how, I mean, this infrastructure gap that we read about globally in developing markets, what we're sitting at $1 trillion right now. And I'd just like to know, so when we meet again at the Brics Summit, this time next year, I'd like to know what you gentlemen will be doing in your respective capacities, or what you hope to achieve in your respective capacities, to ensure that we actually see a reduction, and a slightly big reduction in that number. And also your advice to business people, entrepreneurs specifically out there, who's wanting projects to be financed, your advice to them to make those projects actually scalable and investable. Jabu?
It's a huge mountain, you know, and it's increasing every year because the population of the globe is increasing. Someone mentioned maintenance of infrastructure. In a number of our jurisdictions, we build infrastructure, but maintenance is bad, so you have to keep up, to keep building. So it's a massive task. But having said that, I think the critical thing that we need to do as the DFIs is to create products that crowd in private sector capital. Because as DFIs alone, we can never,
Can you give us examples? One or two?
I'll cite a few examples, there are a number of private sector initiatives, one of which I'm not trying to give them airtime and to publicize them. It's called Harris. Harris is a fund manager of Pan-African Infrastructure Development Fund. It operates on the African continent. And one of the things, it's a private equity. It raised capital from the pension funds on the African continent. Currently, the participating pension fund is the government pension fund in South Africa, is a Ghanaian pension fund, it's Botswana pension fund. They also were able to crowd in private sector investors. You have the Old Mutual who are investing in that fund, so it's $1 billion fund. And it's a private equity. So once you have a number of these funds, what is it that they've done? For instance, in Cote d'Ivoire, there is a toll bridge which is quite important, that has created the mobility in Cote d'Ivoire that links the harbor and the movement of cars, and it has increased that movement, and it's a toll bridge. And that toll bridge was able to be funded by also private sector people because it raises itself, some revenues. And I think that is one of the things that we should understand. It's not that there isn't capital. It's about the task of developing platforms and mechanisms where you can attract private sector. Because private sector looks for return. We look for development, impact, and return, but they emphasize on returns. So let's create a middle road. And I've cited this one example. The other one, it's Lake Turkana, one of the wind farms, the biggest on the African continent. Once again, that's where you find this private equity, the Pan-African Infrastructure Development Fund, and a number of other World Bank-related institutions coming together with the governments to create and to invest in that facility. So what I'm saying is possible. The key thing, let's create products and platforms where we are able to crowd in private sector. Lastly, is the Independent Power Producer Program run by the South African government, where the DBSA is participating. The private sector is falling over themselves to be part of that, to an extent that they're even crowding out, which is a good thing, the DFI participation. Because we've created a mechanism where people can see return, do good, because the issues of green energy is good for their reports, also for their annual reports and all that, It's not just about money, but it's also about being a responsible global citizen. So there are many ways of doing it. These are but some ways, and I'm sure my colleagues have much more examples to give.
Mr. Hu, could you just give us your final thoughts on making headways in developing the infrastructure challenge here in the emerging markets region? And I think that everybody, or most people in the room, are also quite interested from you in going forward. How worried are you about what is happening between your country and the US, and to what degree will this be a challenge for you, Mr. Hu?
Today we have focused on infrastructure. I have 2 points to make. First, I see huge potential for infrastructure development. There's also broad space for financial cooperation. To speed up infrastructure investment and development, we need to have a huge amount of financing. Just now we have listened to very good ideas. I believe there are several issues that are important here. First, the government needs to play an important role in planning and in building infrastructure for financial institutions. To the extent as the government can afford it, we should speed up infrastructure so that we will not add to the debt burden of countries, especially in Africa. And second, we need to pursue a green development in infrastructure financing. Take CDB, for example. We have issued green bonds in support of infrastructure projects. This is the corporate social responsibility we should fulfill. About China-U.S. trade tensions, as developing countries, we should be firmly against unilateralism and trade protectionism, because developing countries all the more need cooperation and open trade, which is important for our development. China-U.S. trade tensions or a trade war will not produce a winner. A trade war hurts all parties. Although the trade war may have a negative impact on China's exports in the short run, for the U.S., in a long-term perspective, it will also adversely affect the U.S. in terms of growth and employment. So a trade war will not be a win-win result. China and other developing countries will be together with other developing countries to oppose trade protectionism. Yesterday, President Xi Jinping announced more imports from South Africa for beef, because we are going to reduce beef imports from the U.S. And China will also introduce new measures to facilitate visits by Chinese tourists to South Africa by easing visas. So in a globalized world, win-win cooperation is the best way forward.
No, for sure, and I could see the nods in this room, Mr. Hu. Many agree with you here. David, final thoughts as we wrap this discussion up, particularly for me, if you could just speak to this importance of, as DFIs, working together a lot more to fulfill the development agenda.
Yeah. It's critical going forward, because increasingly you're going to have projects which are involving multiple countries, multiple regions. Scale is very important for any infrastructure project, and it's difficult for a project within one country to achieve that level of scale unless you can cherry pick it and group it into a consortium. So increasingly you're going to see DFIs working together. It's already have the multilaterals like World Bank, the African Development Bank seeding a project and then taking in participation from, let's say, the China Development Bank, or let's say the Exim banks of different countries. So it's already happening, and I think it's only going to grow further. The other area, and which I'd like to go back to what Mr. Moleketi said, is to bring in the private sector. Ultimately, the measure of success of a development bank is when it has nothing to do. Because the development bank operates only on those projects which the private sector doesn't want to handle. If you can bring in the private sector and make a project bankable, you don't need a DFI. So ultimately, all of us would be working towards our own elimination, though I think fortunately for our own employment,
to this unemployment rate.
Well, fortunately for our employment, I don't see that happening for quite some time, but that's where it's headed. So PPP is the way to go, the public-private partnership. We've had some very successful examples in India. There have been challenges also, because when you have a PPP, you're having one party, the public party, who is both a party to the contract and is also a regulatory authority. So where that conflict of interest is very difficult to handle, particularly when you have regulatory capture. But to give you one very interesting example, if you talk to international air travelers, and you ask them which is their favorite airport around the world. Now, you'll get a variety of answers, but one common answer will probably be Changi Airport in Singapore, which is a favorite everywhere. Changi Airport in 2017 completed 60 million passengers in the first half of December 2017. An airport in India, the Delhi airport, completed 60 million passengers in the first week of October. Now, this is a public-private partnership between a private Indian company and the government of India, and it's considered one of the best airports in the world. So I think you have a template, you have a model. The road ahead lies there.
Sure, certainly. And that brings us to the end of this discussion. Thank you so much for engaging us. Thank you for giving us your time. I'd just like to say a final thanks to our panelists that joined us on a stage. That is Mr. Jabu Moleketi, who is the chairman of the Development Bank of Southern Africa. Mr. Leonardo Boltelho Ferreira, Director at the Brazilian Development Bank, Mr. Sergei Bogatinkov, who is the Vice President at the VIB, or the Russian Development Bank, Mr. David Rashkinha, Managing Director at the Export-Import Bank of India, and Mr. Hu Hai Beng, Chairman of the China Development Bank. From us here in Cape Town, a very big thank you from the team, and see you next time.
Yeah. Thank you.